the warriors who's ready for the battlefield. I see some new names here. Given, Valton, how are you? Hi, Richard, how have you been? And Kuaku, welcome to F.A.C.E. Yeah, we start top of the hour, Monday through Friday, guys. Let me ask, who's here for the first time today?
I am. Good morning.
Me too. Give me a Y if you are. Okay. So maybe you guys have been here before. So silver's on fire, right, Stel?
Yes, sir. And I wrote on the chat room earlier, I got out of half of my long. We're getting now very close to this channel resistance. If you go on a daily, you'll see it's pretty important. And this long trade has done very well. It's like around 10% within a month and a half.
Yeah, that is nice. You want to show that chart? It's a daily.
Sure. It's a daily. I'll show that. Hold on.
Yeah, go ahead.
Hold on. Let me grab the screen.
Because on the 4 hour, it didn't confirm. I actually taken a shot for a short scalp here. I mean, I was way wrong on the gold silver ratio turning to go back up. It's really been sinking. Oh, okay. Beautiful picture.
Yeah. So that looks to be important. And
yeah.
You know, and when a trade has gone so quickly, so well, I always want to take some off, and you know, 10% or so is not bad for a month and a bit. Anyway,
no, if you did that every month, why are you laughing?
I wish all the trades were like that, but no, I'm taking half the position off. My plan is simple. I want to buy on a dip back to. Well, actually, I don't know how far down. I think these levels around 21 and a half to 21.70. I know it's a couple of bucks below. Or if we break above 24.50 on a daily close, I'm buying that back. But we've said so many times in markets like these, it's always good to book some profits or a lot of profits or a little bit. It doesn't matter, you know, get some in the bank, and and you can trade a little bit with less stress afterwards.
Okay. Yes. Being tactical. Stelios being tactical. Okay. So we have you up here. So any other looks that you're paying attention to since we have your charts up? Oil's getting near a sell zone.
Yes. We talked about that earlier today.
Oh my God, I promise I wasn't there.
So oil is a bit tricky, and it's very volatile. It's like a widowmaker, right? So it's from what I read, the oil market is still relatively tight. You have OPEC kind of threatening that they're going to be cutting production, but the global economy is not doing great. Let's face it. So demand is dropping. So I think between those two forces, the risk is that we go lower. So I would really like oil to come and retest this broken support trend line, which is also the 50 DMA. That would be lovely around 75 and change, and you know, short that for a excuse me, for a another run lower. Pretty close stop and small size, because this thing can really move, so I don't want to risk too much. But oil is, yes, one that I'm looking at. The rest, in terms of equities, well, what have I been saying for the past days? I think we're going to be grinding, grinding higher into quarter end, and we are grinding higher. And it's not just that it's quarter end. Positioning seems to be short. We've talked about CTA record short positioning in many years now, since, what is it, 2016 or something like that. I have to check the chart again. So it feels like the path of least resistance is still higher. That's why I wouldn't short this. It makes a lot of sense to be short equities because of the global environment and you know, the banking issues and everything. But in the very short term, I would really not go against this move.
Okay. So you know, everything's up. Dollar trying to hold by its fingernails the 102 level. Let's take a look at your Dixie chart here.
Yeah, well, we're getting to an interesting level. This is the 50% of that big move.
Okay.
Really, we have to break below these lows at 180, 100.80 for this to be looking pretty bleak for the dollar. I'm still bearish the dollar in the medium term, but I'm not shorting it here. My bias is to be short, but I'm not shorting it quite yet. I am implicitly shorting it by being long metals, right? So that's one way to do it. But the euro has been pretty strong today again against across the board. And this is even though we got some CPI prints, really, really soft CPI prints from Spain. I don't know if you saw that. And we're getting German CPI as well. Actually, German CPI, okay, it beat by 0.1% year on year, but it's still quite a bit lower from the previous reading. But look at Spanish CPI down from 6% to 3.3, which is
Nice.
which is a big old drop. And we were talking about this. Hold on, how can I go back here? We're talking about this earlier. It's a combination. We've always talked about how the way mathematically CPI year on year is being calculated, and how when we start comparing to last year when prices were going up at a very, very strong pace, by definition, the year on year print should, all else being unchanged, should drop. Now, we also have had over the past couple of months oil dropping, but more importantly, gas dropping, natural gas by a lot. So you have energy prices coming lower sharply. So that is also going to be affecting the year-on-year CPI prints. So that theoretically should have had a negative effect on the euro, but I guess month-end shenanigans have precedence. We have to be watching for the euro coming Monday. I think we might see a little bit of a retreat lower, but overall, it's
after the month-end flows.
Yes.
Okay. Do you have any kind of picture in Bitcoin? Because it's diverging for me. This might be like the third drive to a top. If you go to like a 4 hour, you'll be able to see 3, I believe.
Okay, let me move this out.
Kind of. At least there is no confirmation. Look at the RSI.
Yeah, I mean, I look at the daily on these things, and you're right. I look at the daily, and we are at a very, very important level. It's not only a fib; it's the area here where it kind of took its time on the way down. Then previous lows in July 2021. It is an area of interest, a pretty important one, and I have to admit it looks bullish. And as long as risk keeps getting bid up,
that's
I
the
think
whole
this.
key.
Exactly. And, Bitcoin has been trading quite technically recently, but it's been mainly a risk proxy. So if we do get a continuation higher in risk assets, you can bet this is going towards 34, 35K. That's what I think. Ethereum is a different story. It has broken out of this wedge thing, whatever you want to call it, but it's heading into pretty big resistance now, while Bitcoin is clearing resistance. So Ethereum is a little bit, for me, I would prefer Bitcoin if you want to be long, or conversely, if you want to be short, I would prefer Ethereum. So
where are you at on yields? Where are you at on yields?
Yields are going sideways. I still think the most likely scenario is we grind a little bit higher in the absence of any bank failures and any particularly bad data. But we are kind of in no man's land here between the two 50 and 200 DMAs. And, if you put a gun to my head, I think they go higher, but I really don't want to trade them here. I want to see a break above, let's say, 370 for me to say, okay, yeah, we're going towards 4% afterwards. But at the moment, I'm not touching them.
Okay, and what else is on your mind? Yeah, you think for the
holidays?
Yeah, isn't today Friday?
No, unfortunately, no.
All right, so
I don't have much else on my radar. I'm very light In currencies, I'm not doing much, just sitting and waiting for things to come to my levels.
Smart man. Talking
Well,
about man, how about Kman? How are you today, K?
Hey, hi Dale, hi everybody. Yeah, I'm good, my friend. Thank you.
Good. Top of mind for you today?
End of month, end of quarter, end of fiscal year in Japan. It's
Get it over with.
flow
Already,
driven.
right?
Sorry?
Yeah. Get it over with already,
Yeah,
right?
it's all flow driven. I don't know if I'm going to keep anything into tomorrow, because it could be a bit of a wild day. On the top of my mind is that I think today's euro fixings may be and I'm going to really take a big bet there. May see a bit the top for the euro for this month. I'm not sure if it can hold until tomorrow. But yeah, it's all going to be flow dominated. The yen, if you look at the yen, yen pairs are close to their highs. It seems that the investor rebalancing flows are dominating any repatriation needed. There's been so much going on the bond side. It's very tough to read exactly into what we can expect, especially tomorrow. But as they have done in the past years, not every year, but we could see this last fixing in Japan being the top of some of those yen pairs. We will see what they do. 9:55, 10 a.m. Tokyo time coming. So that's in not too far a distance. And
Still
for
working,
the rest,
it's with risk continuing to the upside, you're still working the long side of the cable, Kman?
I think tomorrow is going to tell us what there is to do. I feel a lot of this risk on it is a mix between no more dead bodies, but also perhaps the end of the month, quarter, people positioned a bit strangely, perhaps. It's going, I expect, well, I may be wrong, but I expect quite a volatile bond market tomorrow, actually. Because we have seen all those big yo-yos over this month and the quarter, and I can't imagine there is no more rebalancing to do right now. So it could be quite volatile tomorrow. I'm expecting a volatile session. For today,
Any of it news driven or just it's the end of the month?
sorry, my friend.
Is any of this news driven or it's just
No. Just needing to rebalance after those wild swings that we've seen the whole quarter, really, right?
Yeah, you mean this whole move we've had? Yeah, we've had.
Yeah, look at that, and then in between,
yeah,
20, 25 BPs up and down in a day's time. The bond books will have been affected by it, so I expect some fireworks tomorrow on the last day of the month. Well, yeah, it's going to be a funky end of month, I think.
Okay.
And as far as risk is concerned, I kind of agree with Stel as well. And we're seeing it in stuff like Canada makes even the rand who is suggesting that we may be in for a serious test of the 18, the big figure again. So I wouldn't rule out more of the same tomorrow. But we've seen that some last days of those months can completely go the other way around as well. So I just expect it to be very volatile.
I'd like to bring Steve in because Steve, I don't know, the last big rally we had in precious metals, you didn't like it because gold was leading instead of silver. So with the leadership and the weakness, and look at that candle and the gold silver ratio, is this more of a true precious metal bull market to you with the gold silver ratio cratering and silver outperforming? See,
Definitely.
how long ago did you say that? You think?
It was last week.
No, it wasn't last week.
No, it was last week.
It was
No.
1997.
Yes,
No.
1997.
It was
So
on it was on this run, Steve, when it was on this run to up here. Okay. And
oh,
this was
I've
one-
been saying it. I've been saying more or less the same thing the
oh,
past several
okay.
days.
But you don't believe
It
that
might
anymore.
be in the morning. Might be in the morning edge though.
Okay. All right. Well, I remember that was one thing, and it was one thing that kept you out of the market. And it was right because we did have the big sell off, and that's when gold was leading. But, you know, even with the big move in gold, silver's outperforming. So we're in a true bull market.
Listen, a key level is going to be 24 for silver. We have a big long-term descending trend line resistance there.
You know, I haven't seen your charts for a while. Do you still have any?
Nah, I don't use
Are you
charts
throwing
anymore.
them? Give
I
them
don't
to
use charts.
Jason.
I don't use charts anymore. I'm joking, of course.
So let's take a look at a few of your charts, or I like your technical work. If you want to share a few things that is on your radar. I know you're still trading, even though you're not as active in F.A.C.E anymore. So I miss your going around the horn. Let me tell you something, guys. When we started F.A.C.E, Steve would do a whole roundup. He goes through every pair on this, almost every pair, and take requests. And his technical work and plus his discipline of waiting for confirmation, which is a big problem for most traders, being uh, afraid of missing it and not waiting, trying to get the edge. And Steve would be a great influence for you, becoming a member or TFP and keeping an eye on his stuff.
Yeah,
So,
we're still doing that on the morning edge on a daily basis.
right.
Thank you, Dale.
Well, that's why I'm saying, if you're just here for F.A.C.E and you're fairly new and you don't know Steve's technical talents, it helped me out, cut me straight when he was doing it. I need you, man.
Thank you, mate. So
Anyway,
this is the long-term channel I was talking about here in silver, right? And
okay,
we
yeah,
are now
Stel
very,
showed that.
very, very close
Yeah,
to the trend line resistance. So silver is currently testing major resistance. So obviously buying here doesn't make sense from a risk reward perspective, right? But we're getting close to a bullish breakout. Now, nobody can tell us if that's going to happen imminently or we're going to get another rejection from this channel and stay within the context of this long-term correction. But one thing is for sure, you talked about the gold-silver ratio, and yes, the gold-silver ratio has turned lower again, right? For the time being, quite aggressively. We went from an 80 RSI reading to now almost oversold in a matter of like 3 weeks or so. But this is all I'm focusing on at the moment. If silver can actually produce this type of a bullish breakout, that's going to be a very bullish signal for gold as well, obviously. Now, gold has paused here, right? So far, though, the short-term price action looks more like a symmetrical triangle, and that would imply that there is a decent chance for another leg to the upside. Right now, on the other hand, platinum seems to be the weaker. Seems to be the weaker sister here. During the past few weeks, it's been doing a lot less than gold has been doing, even worse than silver, which was lagging gold. I mean, we know one factor of why that's the case, right? Gold became a destination for a lot of people that wanted the safety of old money in the with the banks being in the spotlight and all the jitters having to do with the banking and financial system. So it makes sense that a lot of flows went into gold and why it would overperform during such a period, the other metals. And obviously, if the dollar remains under pressure, and as Stelios said before, we don't get any comeback of all these fears about banks, then A, metals should remain well bid.
Yeah.
B, in this case, you would expect silver and then platinum to perform better than gold under such an environment, right?
Which silver is.
What did you say about silver? Sorry.
The silver is outperforming gold.
Yes, the past few days, yes, but before that it wasn't. But the past few days, yes, it has been overperforming gold again. But as I said, we're now on very, very critical resistance having to do with silver. We break through that. At the same time, we're going to be breaking to overbought levels in the RSI. And as I've explained before, when we're talking about longer term charts, like from the daily and even longer term, like weekly, etc., getting overbought or oversold readings is not a signal that you should be fading this market. These markets. It's actually a signal that there is true strength or true weakness in a market, right?
Right.
A lot of people are unfortunately interpreting the RSI signals in the opposite way, thinking that the moment something is overbought, you should be selling it, or the moment something is oversold, you should be buying it. Usually, that's not the case. When something has strong momentum, usually it keeps on going in that direction, right? And people should should be cognizant of that. So in this case, we are poking our nose in overbought territory as we're testing key resistance. So we managed to break through that, and I'm going to be very optimistic about how metals are going to be moving from here. We're going to know soon enough, obviously, right?
Yeah. Yeah. I'd like to put this out to everybody. The president of Taiwan did a stopover. I believe it was in New York. Really, they call it a stopover. Then she's off to Latin America. But next week, the plan is for her to come to Los Angeles and meet with Speaker McCarthy. And the Chinese are not happy about it. They rationalized Pelosi. That was her swan song. But they know why the Taiwanese president is coming to meet the Speaker of the House for support, for more military support.
Yeah.
So I do think that there's going to be consequences for this. I don't, as in the financial markets. I'm not saying that they're going to invade Taiwan. I'm just saying they're pushed to the edge, and they will
Definitely Taiwan is a major issue for China. We know how much they
there'll be
pay
a price for this visit, is what I'm saying.
Just to give you an idea, how important even semantics are for China having to do with Taiwan. I think I've said this story before, probably on this webinar. Do you remember that we once had an interview with my friend Lars Rasmussen, the guy that actually co-founded Google Maps? He's married to a Greek wife, and they live here now. And I met him because his daughter was a classmate of my son when they were in kindergarten. Now they're at a different class, but still in the same school. So he had told me the story, and that was years ago, right? He was back then in Australia. Somebody made a complaint in Google, like opened a ticket and made a complaint in Google about how the name of Taiwan, and it should be named Taiwan or whatever else, to some kind of a low-level Google Maps employee, and that person overnight changed on Google Maps. It was like something, the long title that China wants to give it, and somebody changed it to Taiwan. That was years ago. And they woke up Lars in the middle of the night in Australia because China had actually contacted Google and told them that this is unacceptable, etc. So they had a whole crisis, and they had meetings like for a whole day about how they're going to handle the name of Taiwan in Google, and they even had to completely remake the code and change also the font size to be analogical to the size of each country. So Taiwan is almost invisible, like on, they did it because of that, right? So just to give you an idea, and that's only semantics. Imagine when we're talking about real stuff like commitment to provide military support, right?
Yeah. So just something to keep an eye on. I can't remember a geo shock to the market. I don't think the market really took I'm talking about S&Ps when the Russians invaded Ukraine both times, first to get Crimea and then into Ukraine. There wasn't any big negative market reaction. So, people are, I think, pretty complacent about geo risk right now. More focused on, of course, the banks and the Fed and financial things, but there is some pretty big geo risk out there.
Yeah. Speaking of which, keep in mind, somebody just mentioned it. We have data coming up in 3.5 minutes.
We have the
right?
final
Okay, well-
GDP print.
Okay, well, you guys want to set that up?
We
Blake
have,
likes it. Is
yeah.
here?
Blake should be
What?
here.
I'm sorry, I fell asleep. I'm what day is
Come
this?
on, it wasn't that boring.
Where are
man.
we at? What's
It wasn't
going
that
on?
boring, man.
I was like, I just fell asleep at the wheel. My forehead hit the microphone.
Oh wow.
No, just kidding.
I heard
I was
that
actually
thump.
He's such a crybaby, isn't he,
I was-
Dale?
This is like the
Actually, this has
original
been great. I
face.
haven't had to say anything. I was actually just getting set up here for the markets. You can see we got the S&P 10-year yield. I'm actually going to put up the dollar index really quick. We do have final GDP. I would say this is the number that's going to move the market if we're going to see any type of move. Here's the dollar index range we've been looking at, and
Nice.
frankly, I just think that the dollar needs.
We
to
also have core PC, the final reading quarter on quarter. That might also be quite important, right? PC is the favorite inflation measure for the Fed, and why wouldn't it be its favorite? It's the one that understates inflation the most.
That's great.
Such a character.
That's a great point. By the way, the dollar's getting just wrecked into the data. We got the euro. We had some German CPI, German inflation data that came in higher than expected overnight, correct?
Yes, but still a drop. And Spanish CPI, you don't want to see that. It collapsed, absolutely collapsed.
Oh, really? Okay, all right.
Yeah.
I would want to see that if I was Spaniard.
Down from 6% to 3.3 year on year.
So just wow. Oh,
Yeah.
Well, from 6 to 3.3.
Yep.
Wow, that's disinflationary, I would say.
It's-
Hey, really quick, just for those of you that are not aware, this is the ForexAnalytix platform. These are all the different instruments that we cover. Here's your live squawk feed. You go over a couple to the tabs to the calendar. The data flash is where we'll pull up the information as it's coming out. It's like similar to like if you're looking at breaking news for Bloomberg. You know how people tweet on Bloomberg like, "Oh, the data is this, data is that," really quickly. They get it through a system that's very similar to this, but you don't have to pay. Let's say I paid 20 just 3 years ago. I was paying $2,800 a month for Bloomberg. So this is included with ForexAnalytix. There's obviously Bloomberg's a way more intense system. I'm just saying this is the data that I actually use the most. Believe it or not, was the news release. So we have yields right in the middle. You can see the S&P is over here to the right. You can see the instant reaction. Dollar index is over here to the left, and they're all 15-minute charts, so we can get a decent intraday reading of how this data is impacting the markets. And remember, we're being dominated by end of month, end of quarter, and Kman, I know you're here. End of fiscal quarter or year, excuse me, in Japan too, right?
Yeah,
So
correct.
2.6, so 0.1 lower.
That's 2.6% below the 2.6.
Jobless claims barely moving. I mean, you know,
Core PC 0.1 higher. So I would say mixed.
mixed. Yeah. Yeah. Stronger inflation, weaker growth. That's what do they call that? Somebody help me.
Stagflation?
Stag
No.
something.
Stag,
Yeah, to be honest,
You have a
stag bachelor party?
Yeah,
what?
stag party.
Stag party. Stagflation. That sucks. That's not something that we want to utter from our words. I'm sorry, but Kman, you were saying Stelios stepped in with the news. Japan's fiscal year end.
100.
Yeah. And I was saying to Dale earlier, so it's the last fixing coming up in Tokyo. So we might have to pay a bit of attention to what they do, because it's not rare that they fix extremes there on the last day. And as a matter of fact, if you look at all the yen crosses, they've really advanced quite a bit over the course of the week.
Right.
So we may have this last leg on tomorrow's fixing.
Yeah, so you guys keep an eye. I mean, these moves have been. Whoops! Do you see my alarm? I should get filled in euro yen here very shortly intraday, actually. But all that analysis can be found on ForexAnalytix. So check it out. $1 for 10 days. Try it out. Be inside of our community. One of the most active communities on the interweb is right here. You can see we're chatting in the general chat room, the S&P chat room, the Flowonomics room. Yeah, there's a lot of chatter going on, and in the trades room as well, you can see where people are buying and selling things. So check us out. Dale, I know you have an interview. Steve, thank you for not letting me speak today, because it was a nice rest, because I'm going to see you guys in 45 minutes anyway on the Morning Edge, which is exclusive to the ForexAnalytix community. So Stelios, Kman, Dale, thank you guys.
Dream
Thank
team.
you, everybody. Thank
I'm
you,
trying to
Coach.
Hey, good job today, guys. It was great hearing from the original cast and having a guest appearance by Kman.
I
Our
hope.
special Kman. Our special guest today was you were our special guest today.
All right. Okay.
All right, buddy.
Have a good day. Have a good interview.
All right, good hunting, team. Carly, always look forward to talking to you, Carly. I love your charts. I love your work, and I'm curious, what's on the menu today. So, Carly, welcome back to F.A.C.E. Asking you to unmute. Can you unmute, please? There we go.
I'm here. I'm sorry. I had to take a
That's-
quick call. Sorry.
Oh, it's okay, Carly.
It's
You
the
know,
life and the life of a broker. Sometimes it's
Yeah.
it's crazy.
Okay, so welcome back. I
Thank
really
you.
look forward to seeing what you have today. You've made some real nice forecasts, Carly. Where do you want to start with? You want to start with the dollar, your view there, and
Yeah, sure. Let's do that.
I
I've
know
had
you
a lot
like
of.
markets at extremes.
I
You
do.
probably have other things besides the dollar you want to talk about, and that's fine.
Just as a warning, I've had multiple technical difficulties this week. There was a Microsoft update that just ravaged all our computers. So I'm on my laptop, so it's not going to be as pretty as it usually is. Okay, can you see my screen?
Yeah, got it.
Okay. All right, let's see if we can pull up the dollar here. And of course, I don't have my dollar chart handy. Here we go. Okay. All right. So I've been overall bearish the dollar for quite some time, and I continue to be. This is the US dollar index traded on ICE. And you can see that it actually, since it topped out here late last month, it's actually been pretty textbook. We've been following these trading patterns. The way I see it is you can see this lower pattern. This is probably what is fundamentally reasonable for the dollar. And you see we have some outliers
Just some, you know, just chop around, grind like it did
Right.
in 2019, 2020.
Yeah, I think so. So as long as we stay under 106, 107, which we tested it not too long ago,
Yeah.
a couple of weeks ago, and failed pretty miserably. I think we're headed down to about 98. That's probably going to be supportive, but I think the crazy volatility in currencies is probably going to die for a little while, and we just kind of chop around in this range somewhere between, let's say, 105 and the high 90s. That's all it's really going to take to keep asset prices somewhat buoyed. I mean, if you remember, like gold, silver, treasury stocks, when the dollar was doing this, they were all just getting completely hammered as the dollar went parabolic. And so now we're kind of wiping some of that out. And I think it actually is supportive for almost all assets if the dollar does trade in this range, which I believe it will.
You can buy the world. If you get the dollar right, you get everything else right. There might
That
be
is
some
true.
things out of rhythm, like this bounce we've had in WTI. Is it a selling opportunity, or was that an important low based on your work?
I believe that we've seen the low in crude oil. So this is a daily chart. I'm going to show you something a little longer term in a minute. But you can see this is July. You can see we're kind of trading in a sideways pattern. I believe this was a capitulation low. I've been saying this for a long time. When oil was above 130 and everyone was talking about 150, 200, there were all these fundamental stories that were being used to support those ideas. I don't believe those stories mattered with oil at 100 because high prices bring supply, and everybody was already long. And when I say everybody, I'm talking in the futures market, but also even in the cash market, everyone was hoarding it because they didn't know what the future was going to bring. So all of that froth and excess has worked its way out. And I think this was probably some sort of a capitulation low to 60. At minimum, we should head to 80, which is the top of the range. But I actually think we're going quite a bit higher. Let me see.
Why?
Hopefully I have. Well, I think that, the Chinese reopening story, the lack of infrastructure investment, I think those things matter with oil at 65 to 75. I don't think they mattered with oil at 100 to 110, but I think they matter now. And this is a weekly chart. And you can kind of see this blue line. It's almost like a pivot between bull market and bear market. You can see when we break below it, it gets pretty nasty. But oil has spent most of the time above this blue line. And I think we'll continue to do that. I don't think we're talking about $20 oil, although, we've seen it before. It could happen. If the 65 area breaks, it could potentially get pretty ugly. I don't think that's going to happen.
Okay.
I think
getting a request from something I know you were attempting, and maybe you were there for it, or it could still be there for nat gas, the widowmaker.
Yep, nat gas is pretty ugly. So this is a chart.
Have you seen the chart, Carly, of nat gas prices compared to California natural gas prices? They're going in exactly the opposite. Have you seen that?
I haven't.
Every time I open my bill, I go, "Hey, nat gas is $2."
Yeah.
Well, I'm paying 3 times as much as here.
Oh gosh,
I think they need a good hedger, just like
Right.
SVB.
They do.
No one knows how to manage risk. These people, anyway.
It's true.
You like it down here? Looks like 2 drives.
I do.
Confirmation. Okay.
I do. We're getting some bullish RSI divergence here. This is a trend, like a pivot line, we'll call it, that started in April of last year. We tested it in February. I mean, February created the line, and now we're going back to test it again. It's about $2 in the front month, and I think that is probably a place to get bullish again. I'm very grateful. We put on some bullish trades right around here with we recommended to our clients too, and luckily we had the wherewithal to get out because that would have been pretty nasty.
Didn't you have problems with the one part of the option spread on that rally?
On this one, this particular. I'm sorry. Go ahead.
No, I just remember you saying that you were right the market, but something strange happened in one of the options that you wrote, or
it wasn't on this particular rally here, but we've had that problem a few times, honestly, because in the last couple of years, the vol has just gotten so silly in some of these markets. We've had that happen to us a couple of times. So unfortunately, option trading is for all the benefits, which are pulling some of the volatility out and a smoother ride and basically more room for error, sometimes those benefits turn into disadvantages because markets get a little bit out of whack. And so it happens.
Well, I'll tell you that the story that you told me has, I used to do a lot of verticals, right? Where you buy the call and you sell a call, and
right.
Your cost is less. And I thought about your story and I go, you know what? The premium and the, additional lowering of the cost of the trade may not be worth it if you get into, especially if you're pulling a VIX and looking for a 50 or number or something.
I agree with you. Yeah.
What are you thinking here? I know you talked about the dollar and its behavior is going to continue to buoy the market. Do you think we're going to new highs, Carly, in the SPX?
What we can do.
Huh?
You're talking new highs like 48, 4,900?
Yeah.
I think eventually we will. I think that'll take some time. I'm not bearish though. When I look at things, I see, this is just a 6-hour chart, by the way. So just to give you context, and I think the S&P is going to.
Why 6?
For whatever reason, like anything shorter, like futures, in futures, we're kind of generally looking at a shorter time frame than stock traders. So 6 hours is kind of like a good turning point for me. It pulls a lot of the intraday noise out of it and lets me skip all this chaos. But it's also short enough that you can see like the 2 or 3 day moves. And so I don't know, I'm just comfortable using that to see what's going to happen over the next 3 to 5 days. We're looking for like 4150 on the upside here in the short run. I mean, if it breaks through that, honestly, we're going to run against some pretty good resistance at 4,200. So I'm not saying we're going to break out and go to 4,800. I'm not sure that happens, but I don't think people are positioned for 4,300 or, anywhere near. From what I can see in equity portfolios, basically everybody is underweight stocks, and in futures, everybody's short. They've liquidated some of the short positions in futures, but most speculators are still short. And out on the streets, when people talk to me about the markets that generally don't have anything to do with the markets, they all tell me
like
that
the CTAs,
like just average.
Okay, the
Nope.
CTAs have record shorts.
They did. They've unloaded some of those, so they're not as short as they used to be.
Got squeezed.
Yeah, but I think so. A lot of them are getting squeezed. But if you just go out and talk to like your family or people that aren't really involved in the markets, honestly, most of them will tell you they've either cashed out or they're going to cash out their 401k. They're going to sit on the sidelines. They think the world's ending. The banks are going to bring us all down. When I hear stuff like that from average people that have never talked to me about markets, I think everybody's positioned for one thing. The market's probably not going to do that. So I think the path of least resistance is higher. I just think the world is too short. And if the dollar keeps going down and we don't get any fresh bank news, it'll just kind of
would be the jet fuel
propel us up. Correct.
Yeah. Okay. Before I started having you hop around to different charts, did you come here with something in mind you wanted to share with us?
To be honest, no. I came here with
I know
open mind.
Tech issues.
Yeah.
Why don't we talk about this? I noticed this.
Okay.
It looks like wheat.
Oh, that's a good one.
If it closes over $7, I see 2 drives there. Closing. Okay, you already have it closing over $7.
Let me see if I can find my trade chart. I might not be able to. Like I said, I'm kind of working on subpar conditions. I can't. I'll just go to the regular chart. We had put out an option spread recommendation a couple weeks ago when wheat was down here, playing the upside. I actually think
it's bottom.
So this is, I think it's bottom. This is the way I look at wheat here is, let me see if I can stretch this out. So we've kind of been working on this trend line here, and we broke below it, and we've been seeing this in markets. Normally you don't see it as much as we've seen it in the last couple of years.
You mean false breakouts and breakdowns?
Correct. Yeah, they just trade outside the lines and sucker everybody in and then go up. honestly, as a broker, I can see things that a lot of people can't see. And what I've noticed in the grains is there are a lot of market participants that they're kind of green. They don't really understand grains. They probably don't even know if they're buying corn. They're not buying the corn they buy in the store. Like, they really just aren't familiar with the products, but for some reason, something has lured them in and they're buying it. They're only going long. They never go short. And so there's a lot of those. And I think it's triggering kind of exacerbated sell-offs, because most of them are basically getting wiped out of margin here. And I've seen it multiple times in the last 2 years. It just happens over and over again. So these are like just liquidation margin call events. But now that we're up above this line, this is the May contract, about 690. As long as we hold 690, honestly, I'm looking for like $8. So I think wheat's got some room.
And I believe the beans aren't as constructive looking, are they? We just, well, you see, you know,
Yeah,
could be.
I don't know. For whatever reason, the reason I'm not as bullish beans as I am wheat is $14 to $15 beans historically is quite expensive. So I feel like it's fundamentally going to be a challenge for for beans to get up to 15.50, which would be the top of the range. This is July contract, by the way. It's not impossible, could happen, but I just feel like it's going to have a hard time breaking through this kind of confluence area. So like 1460. So if you were savvy enough to get long beans down here, I'd probably be locking in profits, protecting them, because there's a really good chance we roll over. And there's a WASD report on Friday, which is obviously a wild card. Could move things either way. So
Okay. I was going to ask you about, I forgot what I was going to ask you about, Carly. Help me out here today. So
okay,
we talked
well,
about the grains. Okay, sugar,
yeah.
everyone, oh, I know what I was going to ask you about. Is there too
Okay.
much bullishness in the precious metals now? Or are we going to continue to blow off?
Okay, I don't think we're done yet. So let me look up, see what we got here. Okay, so
2100 looks like a magnet.
yeah,
right?
I don't have a lot of real estate on this. Yeah, so 2100, this will be the third time we've tested, if it tests it, and I believe we will, because I am bearish the dollar.
Yeah.
If you remember last year, gold, everyone was like, why aren't gold and silver going up? I mean, we have inflation, we have war, we have all kinds of craziness going on. But the reason was
dollar.
Exactly. The dollar was strong and interest rates were really high. And when interest rates are high, it pulls money out of things like gold, because people are looking for yield, which gold obviously doesn't pay any yield. So, but those two things are normalizing themselves. I think the dollar continues lower. I think interest rates continue lower. So with that said, I think it kind of gives gold a green light to maybe break above 2100. If it tests it, that'll be the third time in the last handful of years. Yeah. The last time we saw 2100, I think it was 2011. So this would be the fourth time. And when in markets, when you keep banging up, like knocking on a door, eventually the door opens and you bust through. And I think we're getting really close to that.
And it's an old door, you know.
It is an old door.
It may have had some termites chewing on the locks. Yeah,
exactly.
Okay, I like that metaphor.
And people have given up on it. So honestly, I think there's a really good chance we break through. And if so, I mean, 2600 maybe might be a little lofty, but if we come test trend lines out here, I wouldn't be shocked to see 25 to 2600.
How about silver? What do you have for upside there?
Okay, so silver, again, sorry, these charts are messy. They look a lot better on my other computer.
Yeah.
All right. So silver's been underperforming gold for quite a while. I think kind of a similar resistance area in gold, like for silver, $32 an ounce is the same as gold, 2100 for gold. So you can see we're still way down here in the low 20s. I think we at least test 3200. I actually think we break through it just like we do gold. If gold breaks through, I think silver's going with it. And I'm looking for like 37, 38, somewhere in that ballpark right up here. I don't think we're going to see 50. I know a lot of people are looking at that. This $50 print was 2011, and it was just sheer chaos and for no reason. And I'm not sure we'll ever see 50 again, at least in the next handful of years. So the high 30s, I think we can
Okay.
see.
Okay. You know, what a dose of sanity with all the silver squeeze people out there.
Yeah,
They're talking
yeah, no,
three numbers, you know. Okay.
yeah. I see. Yeah, I read all those things. Well, some people are looking for gold 5,000, 6,000. I don't see that. I just don't. But then again, I've seen things the last couple of years that I never ever thought I would see. So you never know.
Where are you at on yields? Or any
Okay.
interest rate instrument that you use?
Okay. So we generally trade 10-year note and 30-year bond, and I'm bullish long term. We're
Okay.
kind of trapped in this little pattern here between, this is like the downtrend support. This was the uptrend support that gave way last year. The interesting thing about I got hammered pretty hard in treasuries in multiple ways in 2022. And I knew something wasn't going on, but something wasn't right, but I didn't know what it was. And now I think what we were seeing were basically what we're learning now, the banks blowing up. I bet a lot of those banks tried to hedge after the fact, and they were probably hedging really aggressively down here on the lows, because what we saw in treasuries last year was so unnatural. It was just so out of the cards. So I feel like we didn't know it at the time, but that's what was going on. The banks were blowing up. So now I think we've worked all that out. Honestly, I think treasuries probably break above resistance here around 135 and move up. So if you're watching yields, 10-year note yield, I think we'll see
3%.
Honestly, I think we're going for 2, maybe even a little lower, maybe even 1.5. I think we see dramatic changes in yield. I think that there's so much money that needs somewhere to go because we haven't worked through all that liquidity. And with this banking crisis, basically more liquidity is coming back into the system. It's going to have to go somewhere. And I feel like it might go to treasuries. And if so, that's going to push yields much, much lower than the Fed wants them to be.
Do you think that I saw this video that the FDIC or now Congress is looking at this failure, and they're talking about customer behavior as being one of the issues, that they may come up with some kind of legislation that's going to limit the amount of money you can withdraw from your accounts?
I had not read that, but that's a little bit scary to me, but I understand their thinking. I mean, this is such a different world where everybody has access to take money out with a click of a button, and things can happen so fast. Like bank runs can be hours, not days or weeks. So I can it's just a whole new world, and I don't think they know how to deal with it, but I don't think that's the answer, but maybe it is. I don't know.
Yeah, draconian.
I'm just a commodity broker.
Okay. You're just one of the best.
Well, thank you.
One of the best commodity brokers and you can't find many.
No,
I used to be one of you.
I know you did. Yeah, we've thinned out the herd a lot for sure.
Oh yeah, it's anyway, you're a brave, courageous soul and an excellent technician.
Thank you.
Why don't we talk just a little bit about trading psychology and why you choose options, and I'm sure not just for yourself but your people. Do you find that your customers aren't as nervous in an option position as they would be in futures?
Yes, I believe that's true. And if a couple of those charts I showed you where you see big washouts and then the market recovers, people that are trading options have a much, much better chance of writing that sort of thing out. Even if they've got some naked puts out there, they just have more room for error and they're more comfortable. So they can, they're still in the game. The thing is, you have to be in it to win it. And if you get washed out of a futures position at the lows and take a huge loss because you're out of margin or you just can't take the pain and the market recovers, it's really, really hard to recover from those kinds of trading mishaps. And so option traders are just in a position where they're a little less prone to panic. They have a little extra cushion to survive. And I think that makes a huge difference.
Okay. And I can attest to it. Although you've lost time having to live through that. You know, you're going through decay, but you're still
Sure.
there. You're still there. So, you know, what it prevents a lot is being right the market, wrong the trade. Because you
Correct.
could,
Right.
right, because you know that I think futures and cash FX traders, that's their biggest frustration
Mhm.
is, you know, they were right, but they're the way they entered the trade, they were early, and they get taken out, and then the market goes their way, like
Right.
salt.
Exactly. It
So,
happens a lot.
okay, all right, and what is the most important advice you could give to someone trading options? And how do you define risk capital? Because I think a lot of people really don't understand that it should only be risk capital, which is money
Okay.
you can afford to lose and not
Right.
affect your family, your lifestyle. Should be the upper end of the pyramid, not all of your cash, and you try and get rich and um, shoot for, you know, 200-300% returns.
Absolutely. I agree with you 100%. We try to push this point in everything that we do. There's more people trading commodities or futures lose money than make money. There's some people that have perfected it and make money pretty consistently, but those are the exception, not the rule. So you want to be very, very careful. I'm not saying it's not impossible to make money in this stuff, but it's not easy. So if you are going to allocate funds to it, as you said, it should be money that if you lose it, it's not going to change your life. And that's really the rule of thumb. Unfortunately, I think a lot of people look at it in the exact opposite way. They think of it as an opportunity to change their life for the better, and they shouldn't look at it like that. And especially, I get a lot of people that have a good amount of money, and it may even be risk capital, but they've got it in their mind that they want to trade for a living. And I try to explain to them, when you are trading to feed your kids or pay the bills, it's a whole different mental landscape.
Yeah.
I mean, it makes it really, really tough, and it plays with people's minds. And that this is a
Yeah.
mind game. And so if you're putting that kind of pressure on yourself, you're already behind the 8 ball. So I really encourage people, just don't think like that. Think of this as a subsidy to your traditional portfolio, and hopefully you get good at enough at it to, to make some extra money. And if not, you still have everything else. So,
You know, when I first got my Series 3 after I left the floor as a clerk, I had a veteran trader come over to me and said, "Kid, this is a tough way to make an easy buck." You ever
that's
hear
true.
that?
I hear that a lot.
So
Yep, and it's true. I do want to point out, though, we do, my favorite part of this business is helping people hedge their risk. So we've gotten into a lot of hedging, and it doesn't have to be farmers or ranchers, which that's the bulk of it, but sometimes it's people hedging their interest rate risk or their currency risk. And so that makes me feel good about those types of things, because those people are not taking on risk, they're reducing it in their life. And so that's what the futures markets were created for. We forget that, but that's literally what they're there for.
all right, Carly, that's your mission. You'll
All
take
right.
you'll take the people that want to roll the dice and play at the crap table, but you feel better about helping
Yes.
people, taking some of the fear and market risk out of their lives. So that's a great mission.
100%.
Great mission. Carly Garner, everybody. Best way for
Thank
people
you.
to follow you and get a hold of you, and
Well,
and you can take people from all over the world, right? Not just US.
that is correct. We have clients from literally everywhere. This is our website, decarlytrading.com.
Look, she's
You'll
an author
find,
too.
yeah, I've written multiple books. There's all kinds of videos, articles. So that's where you can find me. We're on social media as well. If you just Google search DeCarly Trading, our Twitter, Facebook, Instagram will come up. So that's where you can find me. Yeah, we take clients literally. You know what's ironic? The only place we can't take clients from, aside from people that are on like the OFAC list, is Canada, because Canada has anti-competition rules that prevents Canadians from doing business with US brokers. But other than that, we can take anyone around the world.
Wow, that Trudeau. Man.
Yeah. It's been
Anyway,
in place for a while, but yeah,
Uh,
it's unfortunate.
all right. Well, Laura's saying that you're brilliant. She loves your approach.
Thank you.
And I say thank you. You're a consummate pro.
I appreciate it. Thank you very much.
All right, Carly. So everyone, that's a wrap. Got some great looks from Carly. It's 6 o'clock, Steve. So that must mean that we're, well, my time. It's 9 Eastern. That must mean that we're 15 minutes away from the morning edge, where you could see Volgi's charts, man. Become a member. You just got a little taste of it. He's the most disciplined trader I know. In fact, it agitates me. He's so he's so disciplined. And a matter of fact, I'm a little agitated right now. Just kidding, everybody. So, don't just count your pips. Good luck today. Count your blessings, and we'll be here tomorrow. Wrap up another good week.